Hi, good afternoon, everyone. Thank you for attending our webinar series. Today, we're talking about the Singapore office market. We have with us three experts from the industry who will share their insights as well as tell us, what the forecast is going to be like for the Singapore office market. I'm Oliver Siah, the CEO and co-founder of Fraxtor. Just before we continue, a slight disclaimer. This webinar is only meant for educational purposes. So all analysis, recommendations, and information covered are only for general information. Please do not rely on it to do your own investment. Okay, Fraxtor is an online real estate co-investment platform that allows accredited investors to invest alongside industry veterans at a smaller quantum. Fraxtor offers a wide range of local and overseas investment opportunities to allow investors to diversify their portfolios. This is the Fraxtor team. Rachel Teo, she has more than 25 years experience in real estate development and investments, not only in Singapore, but also overseas, Germany, UK, and also Australia. I'm Oliver, the CEO of the company, ex-military pilot. I flew the Apaches. I have more than 10 years experience managing real estate investments in Singapore. Joyce, she's an ex-banker. She runs our operations at Fraxtor and is in charge of compliance. Marcelo is our CTO. He has more than 15 years experience developing softwares for financial institutions such as Barclays, ANZ. Fraxtor's investment focus. This is what we are looking at for our investors. We have core products all the way up to opportunistic products. So it's depending on what the individual or family office would like to invest in. You either look for total return or income oriented. Signing up on the Fraxtor platform is very easy. You can use your SingPass to sign up for an account. After your account has been approved, you can subscribe for any of the offerings and fund the offering through our escrow account and earn periodic dividends and long-term capital gains from your investment. Okay, today we have the privilege of hearing from three industry professionals. First, we have Jaelle Ang, who is the CEO and co-founder of The Great Room, a premium hospitality-centric co-working operator headquartered in Singapore, with locations in Asia, including the highly profiled Raffles Hotel Singapore. Prior to this venture, she headed real estate development at SET-listed company, Country Group Development Public Company Limited in Thailand, including one of the largest mixed-use development in Bangkok, consisting of the Four Seasons Hotel, Four Seasons Residences, and Capella Hotel. She read architecture at Bartlett School of Architecture, London, and then completed an MBA in Imperial College, London. She also spent a few years in Citibank and Credit Suisse doing strategy and M&A for Asian emerging markets. She is currently on the board of Country Group Development PCL, United Hampshire REIT, and registered charity Playum. Next, we have Alan Cheong, Executive Director, Key Executive Officer, Head Research and Consultancy at Savills. Alan began his career in real estate research in the 1990s with URA, focusing on property market forecasts and government land supply policy. Subsequently, he joined UOB, where he was involved with project financing for large real estate deals. Alan was also acting head of equity research for Prudential Securities, covering regional real estate and infrastructure companies, before moving to investment banking with OCBC, where he raised capital for companies and REITs during their IPO. Of note, he participated in the fundraising exercise for Lippo Mapletree Indonesia Retail Trust and First REIT. He has degrees in estate management from NUS, mathematics from Open University, and is a graduate statistician of the Royal Statistical Society. He is also an adjunct professor at the Department of Real Estate at NUS. Lastly, we have the very famous Ku Swee Yong, CEO and Key Executive Officer of International Property Advisors Private Limited, as well as co-founder of Hug Property, that's HUGPROPERTY.com. Swee Yong's opinion on real estate market has often been featured in the Straits Times, Business Times, Channel News Asia, Today as well. He has published 5 books on the property market. Prior to running his own practice, he was the CEO of Century 21 Singapore, Director in Real Estate Center of Expertise at SocGen, Director of Marketing and Business Development at Savills Singapore, and General Manager at Far East Organization's Indonesian office. He holds an MBA in Marketing from the University of Hull, UK, and completed his Bachelor of Science in Imperial College. Okay, welcome everyone. Thank you for joining us. Say hello to everyone. Hello.
Hi. Thanks for joining us.
Hi everyone. Hi.
Okay, now for audience participation. Okay. Before we start, we're going to launch a poll. We hope you can take some time to fill in this poll. Oh, I should allow, sorry, I'll just redo the poll. I need to allow the panelists to vote. Okay, the poll is now live. The panelists can also vote. I believe all the panelists are at home now. Alan, are you at home?
Yep, I'll vote.
No, are you at home or are you at office?
I'm in the office.
Okay, Swee Yong, you look like you are in the office.
Yes, I am.
Okay, and we know that Jaelle is at home.
I'm at home, but just back from the office.
I see, okay. Okay, we now wait for the results to trickle in. Wow, okay, we're still going. People are still filling in their polls.
You know why? Whenever I want to add one more at my video, people ask me to upload.
Okay, I'm going to end the poll now. Okay, let me share the results. Okay, quite an interesting take. Okay, so for the first question, have you started going back to the office? About 43% of you have not been back to the office. And then the rest of them are pretty mixed. I think ranging from 1 to 2 days to every day. Do you perceive that you are more productive working at home? Okay, I think a lot of you, 43% say that you are less productive working from home. 35% say that it's the same. And then 22% say that you are more productive at home. Okay, wow. Now what are the main drawbacks working from home? I think there's a large, wow, looks like everybody has, majority of you have chosen children and family distraction. I think that is one. Dedicated workspace, difficult to get in touch with colleagues is the other one. And the last and the third one is no dedicated space at home. And okay, where in the home is your preferred place to work? Okay, a large majority of you work in the study room or dedicated room. And the rest are pretty varied. Okay, some of you work in the dining room. I should have put kitchen there, so maybe some of you prefer working in the kitchen. Okay, next. Did you work from home before COVID-19? Okay, so 32% of you said never. 43%, that's quite a lot, said occasionally. Frequent most of the time will be 14 and 11%. And okay, we note that 70% of you are watching this webinar from home. Okay, that's a very interesting insight. And nine of you, or 4% are still stuck in the office. Okay, I'll stop sharing this now. Do you guys have any comments on the results of the poll? Swee Yong?
There are some choices that are not available because to me the biggest drawback of working from home is I tend to overeat and overdrink.
Okay. So what's new? You overeat and overdrink at your office too, right?
No, it's
You have all your alcohol and wine there.
yeah, but I try not to go to the fridge and I get my colleagues to set a password on the fridge, then they don't have to tell me the password.
Oh, I see. How about you, Jaelle?
I don't think I have that issue, but I think the main thing about working from home is, it's really very different building rapport. And if we're having quite critical and difficult conversations with different kind of stakeholders, there's not a lot of body cues that you can read, when you're on Zoom or call. So I think that one is probably the biggest challenge for me.
Okay, how about you, Alan?
I think it's mainly that my home is not conducive. I've never worked from home before, so it's not set up for anything. And
Yeah.
like, for example, when the lockdown first kicked in, no Wi-Fi at home. So, I had to use a dongle. And if you use the dongle, you try to do a video conferencing
Yep.
or webinar, it can be disastrous because if your signal is weak and you're just using the dongle and not your home Wi-Fi, so very disruptive in that sense. Also, because if you're working from home, like what Jaelle said, that you don't pick up the verbal cues, small little things in the past, you just swivel your chair around, you ask the guy seated behind you, hey, what's going on, or for technical advice, or you need advice about the market, you can't, you just have to, you're just living in a very numeric world, and I think that's the kind of feeling I got.
Okay, we'll go into our first question. We're open for Q&A to the audience slightly later. So how has COVID-19 affected the way we work in Singapore? I believe all of us have been affected by the lockdown and by the disease in general. And so what is your take? How, Jaelle, maybe you can share, how has it affected the way that you have worked?
I mean, it's been interesting because I keep getting, I have to answer like, is this the end of offices? Are people even going to go back to offices, or is working from home going to be permanent? So my take, and the narrative has been quite binary. My take is that we've been reasonably productive working from home, but we are coping. We're not thriving. And a lot of us are just kind of, using up the reserve that we have built, whether that be a social capital or rapport or trust that you have already built with people, and you can wear it down and you can continue to be productive. However, when we kind of keep drawing down on this reserve, which we can do for 1 or 2 months, if it goes on to 4 to 6 months, it's actually very difficult for new business development, new deals and new things that happen. It's very hard for problem solving or ideation or building new trust. So then there is this limit on new value creation. So I think in a nutshell, my take is that we really can cope, but we can't go on like that and we're simply not thriving. Just think of the times that people say, hey, Swee Yong, let's meet properly after this is over. You feel like all the serious and big, difficult topics people are trying to delay.
I see. You for the Great Room, in one of the interviews, I heard you mention that people crave for the physicality of things. And therefore, the Great Room is actually built around this human experience. Tell us, how has this affected your current operations now?
So, the Great Rooms always existed because we believe that the very high value part of work, it's not when you're behind a computer. That's work, but it's when, the right people around the table are having the right conversations. That's the high value of work. So the physicality of the space sets up the stage for that. Sometimes it is, transmitting a certain trust in a boardroom. We always say that the Great Room is really a place where, a company hasn't become a Fortune 1000 company, but want to look like, or conduct business with other Fortune 1000 companies. So it allows that their physicality actually builds the trust. Sometimes you want an intimate setting that you can sit in the drawing room and have that conversation. So these things are what matters to people. And during this time, it's extra difficult to do. So the Great Room, it's open, it's accessible, but because of the mandate kind of saying, don't go in unless you really need to, most people have just, doing what is effective and efficient and productive, working from home, but really avoiding meeting and that physicality. So it's become, it's a moot point, right? That's not relevant anymore. It's needed, but people can't do it.
Okay. Swee Yong?
Jaelle is correct. The team building or the rapport building part is really tough. And so for a young graduate who has a job today, trying to develop his network of contacts, or you are a new salesperson, let's say in industrial chemicals. And industrial chemicals during COVID mainly still did okay. But you can never go meet sufficient times face-to-face the procurement managers who are your customers. So that's a drawback. For me, I'm a real estate agent. That part of the real estate agency work, if I'm not allowed to go out to view the properties, I'm severely impacted. And worse still, I'm also actively marketing overseas properties. And even if I were to get my hands onto a very sweet deal, my clients cannot travel for the due diligence, the deal doesn't happen. But on another hand, what became more productive would be things that are probably more suitable for the introverted side of me. So creating new teaching material for the students, writing new articles, doing research, those do not need so much of face-to-face interaction. A phone call will do. Getting me a high-speed connection so that I can download a lot of data and video, that works very well. So for me, on balance, I would say some parts became more productive, some parts of my working life became more productive, some parts of my working life was impacted.
Okay, maybe we can hear from Alan.
Well, for research and consultancy, mixed bag. I can't work from home, but one of my crew, my staff, ultra productive from home. In fact, yeah, he works till 2 a.m., 4 a.m., but he starts at odd hours. For me, I kind of find it kind of strange that, if you work from home and not set up in a proper environment. So that's the thing. But on the other hand, you have cases where, again, it's all depends on your personality and the kind of jobs that you're holding. Some residential housing agents have been extremely productive in the sense of holding webinars for the, to showcase or talk up the market, to keep sentiments, to keep morale high. And so it becomes a circular loop that, I feed back to you, everything is good. So you have that, and you have seen or read that during the lockdown period, the webinars managed to lock in some transactions, but most of them could be just those reissue of OTP cases, option to cases, but rather than actual sales. But nevertheless, it kept morale up. Well, on the other hand, I think the overall problem that I felt during this whole lockdown is that I could not get a sense of the feel of the market. We're only hearing, you're just like going through what you see two-dimensionally on the screen, but I don't get the feel from the body language, the nuances, and what is really going on. Everyone is just saying, it's selling, it's selling, it's selling, but yeah, but what is selling? It's one-dimensional, two-dimensional world, and it's all hearsay. It's then when phase 2 happens, then we begin to see, hey, maybe we have more colors about the market. And then from the office leasing team, say, I can't, it's all simple things that I need to get feedback on what's happening on the office market. office scene, it becomes very difficult. It becomes a text. You just text and you get a single one-dimensional answer back coming from your text. And then you say, oh, anything else you can tell me. I don't really get any feel. And that's why I think I would say is almost effectively during the period of blackout. Again, on the positive side, I had more time to do my own research, to read up on stuff, started my own blog, right? And that's the kind of thing.
That's interesting.
But that happens only in the evenings when you have time to sit down, have a beer, then you start thinking of what you want, and then you start to be more creative, in the evening. But during the day, I think it's webinars, after webinars, or simple call on the phone ends up with a Zoom call.
Yeah.
Which I think you don't need that, right? You just email, or you just call the person or text the person why a need. And I realized that a simple 5-minute question or simple 5 minutes of your time, if you go through Zoom, it ends up half an hour.
Yes.
And my regular meetings used to be about 1.5 hours. The first one was a record 4 hours.
Wow.
So, so these Zooms, they tend to expand to fill the time.
I see. Yeah. Sorry, Swee Yong, go ahead.
From another angle, what couldn't progress for me were a few of the projects that were multidisciplinary that I was on. These are consulting projects, but the team that had to
No, let's go with this.
included urban planners, ecologists, included green specialists, for example, and of course it included the financiers and the investors.
Yeah.
So because it is multidisciplinary, running a web-based thing with 8 people trying to speak, and each one of us having a different specialization, is a little bit tougher to collaborate that way.
Yeah.
Plus, we are not from the same company. We are coming together to deal with a site development. And I find that definitely Zoom, you really need to get into a room and lay out the plans and look at the sites and then point to it and discuss.
Yeah, I think Alan brought up an interesting point earlier regarding his staff working until 2 a.m. in the morning. So do you think working from home is actually disruptive and causing more stress to employees? Any of you like to take that?
I'll take it. I think there's a bit of Zoom fatigue, right? Because it's almost unnatural and unreal when you're on Zoom. We're like looking at that, being really intent, trying to look like you're paying attention, because there's quite little clues that you can give other person, the sense of presence that you have. And it's unnatural because if I'm having a physical meeting with you, I will be looking around, I'm just not staring at the screen. That's one. The other thing is there's no transition time. We don't really have to dress up, go to work, that commute. But this transition time is actually pretty necessary to go from, one type of work, whether it's a meeting to deep work to actually a home life. It just flows. We're so efficient, yet we're not. We're efficient in padding one Zoom meeting after another. But in actual fact, decisions are often delayed. Like what Swee Yong says, it's very hard to crystallize into a decision when no one's actually physically there. It just becomes this, let's take turns to speak so that we look like we are all reasonably engaged in this meeting. And then you're not feeding that emotional tank and the connection that people need. So I think it's very difficult, and I sense it particularly for the younger staff and team, either because they have less of a social capital with different people to build off, or they just may not have the emotional fitness or resilience to deal with this. It is very difficult.
Yeah, okay. Okay, we'll move on to the next question. So what trends do you observe in the office market? So this picture you see here is from Swee Yong. He wrote an article. You can click on the link, or I'll provide the link later together with the webinar. That you can take a read of what he's saying. So maybe we can start with Swee Yong. His article is titled "A Dark Cloud Looms Over Commercial Properties." maybe you want to give some insights, maybe try to explain a little bit to the audience what this article, what are we trying to say from this article?
Okay, obviously the second quarter numbers have superseded this whole thing, but I was just going on the argument that because at that time, in April and then in May, more and more large companies, the MNCs, banks, technology companies, especially technology companies such as Twitter, Facebook, Google, they came out to say that we'll allow our colleagues to work from home up till the middle of the year 2021. And that's a pretty far out 12 to 15 month time frame that they are planning for. And so when I look at how the Singapore office market might behave, of course, bankers, relationship managers, the frontliners, the guys who need to meet clients would probably still go back to the bank office to work. But don't forget that banks also have a very large back room who are IT people. And what happens if then just on average, all the office users in Singapore, just 10% of the office space were to be given up? That 10% of space that would be given up would be about 7.8 million square feet, given that at the end of 1Q, the occupied space was 78 million square feet. Now, 7.8 million square feet is equivalent to the net lettable area of almost 8 Vivo cities. And so if the corporations here just 10% decided to give up the space, or that each corporation decided to give up 10% of their office space, we would release 8 Vivo cities. Now, that's not even considering how many business cessations have been going on in the last few months. Then, of course, second quarter came out, and later on we'll talk about Alan Cheong's research, and you'll see that the numbers actually turn out to be really...
Maybe I jump to the next one,
Yeah, Alan, why don't you take us through?
Yeah, why don't you take us through Q2's numbers?
Okay, Q2, I think the vacancy rates, we are seeing a slight an increase over Q1. And I guess the main problem is, okay, Q2, we could not really go down to the site to check because it was still like, you know, it takes time to, the staff couldn't do a overall comprehensive study on the reasons why that is happening. But what we have seen is that some tenants have given up space, like starting from June the 19th onwards, when we are allowed to come back to the office. Some have done that. And I think increasingly there have been, into Q3, there have been more of such cases where people give up the space to work from home if the leases happen to expire during this period in time. But on the other hand, we also know that some have asked the landlords to for concessions beyond, over and beyond what has been mandated of the landlord, beyond the property tax rebates, 1 month rental waiver. Now, so far we have not seen a case where landlords have been so charitable to do anything beyond what is mandated. In the meantime, in the background, I think there's been greater pressures for people to work from home. I've heard yesterday or read from someone's Facebook posting that up to some companies are shrinking by as much as 50 to 75% of their current workspace. Okay, that's what companies are doing. So why are they doing that? Is it because of work from home culture, or it could be something else? And we have had a discussion amongst ourselves. It seems that the economic concerns are more pressing than the work from home culture. It's not like, do you want to work from home or do you not want to work from home? It's more like, hey, I'm suffering from revenue pressures around lack of revenue. I'm bleeding. I need to cut costs. I need to cut overheads. And that has been the overall paramount issue or the concern among companies. So it's an economic concern at the moment. And then the WFH thing tends to be drawn into the argument maybe it's not that he's drawn into the argument, it's a good way to cut costs. So I think unfortunately that's the case. But then as we move into 2021 Q3, we're also getting wind that quite a number of landlords are sequentially taking their buildings down for redevelopment. So that will free up a couple, maybe by the time you hit 222, that will free up maybe 2 million square feet of almost grade A offices.
Oh.
So the grade A, you don't have to wait until 221 Q3. By Q221, Q1, Q2, these guys, the existing tenants that will be decanted, will be panicking, and they'll need a replacement premise. These are the guys that may start going out to the market to look for replacement space. So while you have a shrinkage caused by economic or WFH concerns, that window is probably only be open for, I mean, the landlords will feel probably insecure for the next 6 months or so. But thereafter becomes uncertain because you have facing grade A tenants who are being decanted from some of these buildings and they need grade A replacement premises. Now they may shrink, but whether the outgoing tenants with leaving around shadow space or secondary space, you see the backfill from all these tenants coming in from who need replacement space, that we are still working out. And that's why in my second Q write-up, I think that yes, there should be, I expect prices or rents to fall in 221, but there also exists a not insignificant probability that rents may be flat or even possibly rise for some sub-markets in the CBD, particularly the grade A where you have these guys coming over and needing to take up replacement premises.
I see. Can you talk us through the supply? The forecast in 2024 is expected to be more than 1.2 Vivo cities, according to Swee Yong's measurement.
They say if you take the occupancy and you take 10%, I factored in 10 to 20% of excess workspace caused by WFH.
Okay.
But when you throw in the grading in Singapore, it becomes more complicated because you may have offices in the outskirts, in the harbourfront, in the Newton area, but these tenants may not be the kind of tenant who shrink, but the tenants may not be grade A type. So you are grade A, you need to downscale, or you are chased out of one building. You can't move on to a shop house, for example, a conservation shop house. You will still want a replacement premise in a respectable building in the CBD. So that kind of confuses the picture. Now, okay, one more thing. On the supply side, they say the delays are 6 months. We factored in 6 months to 12 months. And that was just like 2-3 weeks ago. After speaking to construction professionals, from general contractors to specialist contractors to quantity surveyors, there's increasing likelihood that the delays are at least 12 months and beyond. Because social distancing may mean that at your work site, at times you can only have 10% of your pre-COVID kind of worker density. So how can you speed up? Even if I have a critical path, I can try to make up for the loss of time due to the lockdown, but social distancing means I can't pack the number of workers in. So there will be delays in the new supply coming on stream, and then there will be decantment from buildings being torn down. It's like striking a beehive, and then you see, everything is where the whole mess will just start to agglomerate again.
So then will we get excess supply in 2022 then, because you're simply pushing the supply
Okay.
down the road.
Maybe 2022, 2023, but I think the work from home thing is then kicks back in again. Employers who want to work from home are thinking of their own P&L and are not listening out to what the workers want. I think most workers will want to work from the office. Sooner or later, they will have work from home fatigue. New CEOs coming in the US, they may just say, hey, let's throw it out the window and let's come back in. I want to make my mark, stamp my mark, and I'm going to be different from the other guy. But again, there could be a gap where you have this mismatch between people coming back to the office and the supply coming on stream. And that's where we don't know. It becomes hazy because you are going down, predicting even like the residential market, trying to predict 3 months down the road is already so difficult that, for example, the URA flash estimate for the second Q was negative 1.1%, right? And when the full results came in, so the flash estimates was from took data from 1st April to say 15 June, and it showed that prices dropped 1.1%. But when you take in that period, first from April all the way to end June, that means from including data from 15 June to 30th June, the index swung from minus 1.1 to plus 0.3. That's a major swing. So you can see that it's so difficult to predict because this COVID thing has caused a behavioral change a behavioral change out of the norm that all the correlations we have or expectations we have, it's all messed up.
Okay.
Fantastic for volatility for the stock market though.
Yeah.
Okay, Jaelle, maybe you can share some insights on the co-working, from the co-working point of view.
Yeah, I think in a way, my view is almost completely different because I don't have that helicopter and more macro context. I see things happening a bit on the ground and, in a more flexible office space. But even pre-COVID, so pre-pandemic, while we think it's quite crowded and there seems to be new operators and new players mushrooming every other week, the truth is that the whole flexible working sector, whether that be co-working, flexible office, service office, WeWork, all the likes, they constitute only about 2 to 3% of total commercial real estate. The prediction pre-COVID has been it's going to be about 30% by 2030. So it means it's going to go 10 times in the next 10 years, right?
Yep.
And people have always thought flexible working is the counteract, is the agility you need if there is uncertainty, whether the uncertainty be geopolitical or pandemic related or just completely shorter business cycles. So I think it's only served to accelerate. It's a real catalyst. And in fact, people have been saying the pandemic has accelerated digital transformation. We've also seen it accelerate decisions that people have been talking about for a long time, but now finally taking action. So we can see some of the traditional offices who's never looked at co-working because they are either super large MNCs that have their own core space or for identity reasons or different regulations. They're really looking at it now. And 2 out of 3 inquiries that we see on the ground, I would say starting from about early June, it's really reflecting that, it's going to come back. People do want that flexibility. So it's still within the total commercial real estate space, but it's shifting. However, that's not to say there isn't short-term pain because, really from June, and in fact, we see it's going to be a little bit longer. Now it's when the job wage subsidies will be removed. We're really going to see the impact of people letting go of headcount, terminations, downsizing. It will play out in the next few months.
Okay, we'll just jump ahead to government support measures. Okay, are government support measures sufficient in protecting SME tenants during this pandemic? Maybe Jaelle, you can continue on.
I have to say that, the support's it's come on really quite swiftly, quite decisively, and reasonably comprehensively. But at the same time, there's so many businesses that are, that are hit really badly. So it doesn't matter how you slice or dice the pie. It feels small, but I really can't see how else this is going to be done. I think there is some sharing of burden or commercial take, because like what Alan's saying, if the vacancy rates are going to go up, then landlords need to take a more commercial view about it. And you're going to get hit one way or another, because you're not going to provide some relief, some support, some rebate, and then you're going to completely lose a client or tenant, then how it's going to get worse, right? So there's this sweet spot where you need to give some to help them tide over if you think they're going to stay, or do you quickly cut loss and find somebody else quite quickly? There's a decision that I think office landlords need to make.
Okay, so, Swee Yong?
I moved from my long-term office lease, which I was in for 5 years. In the middle of July, I moved to a co-working space. So in terms of the number of square feet, I probably reduced by about 60 to 70% in square feet terms. But of course, moving down to a co-working space where utilities and all are included, I only saved about half my rental. And I think as a SME property agent, I look forward for the next 12 to 18 months. What is the revenue potential? How many deals might we conclude? Will there be second, third, fourth waves? Restrictions will still be on or not? So in the short term, definitely I want to go conservative first, because how long will the cash reserves can last? I'm still unsure.
You want the time for information, right? Just more visibility.
Of course, there isn't any now, and Alan also said that it is difficult to get such information. Plus, you don't know how COVID will morph. So, of course, the government intervention was fantastic. However, the government intervention was just an immediate jab to give you the relief. I think it would be fantastic now that the new cabinet is sitting in, that they can consider another set of measures, more measured and more spaced out for the next 12 to 18 months. And otherwise, between October to December, I think we will start to see a lot of other pains coming into the market. In the first half of this year, the total number of jobs that were lost is 147,000. And of course, a lot of that translated into office space that is no more required.
Okay. Alan, your take?
Yeah, I think the money train has got to continue to flow. It doesn't. I will look at it this way, that the whole thing that describes the economic malaise we are in now is summed up as the equation of exchange, where on the left-hand side you have MV, which is money, times velocity of money. On the right-hand side is price times the number of transactions. I think transaction numbers have collapsed, right? Because you're working from home, no one can travel. So your T has collapsed. You print a lot of money, but the velocity of money is so slow, because the left-hand side got the balance of the right-hand side. The right-hand side transactions have collapsed. Price level has come off. There's deflation. The CPI is negative. Then you print a lot of money, then the velocity of money goes down on the left to balance out this equation. And I think unless you bring back transaction numbers, I think work from home is not a good thing, because it stops people from transacting. It's slowing the economy even much worse. I met, working from home, and one day I was walking around my estate, and in the morning, I bumped into a friend who runs an SME, albeit a larger SME, and he said, "Alan, you know how much money I lost?" I really don't know. He said, I don't say the number, but he lost millions and millions. Why? Because he's paying workers' salary, but his workers can't work. He's got over 1,000 workers. So you can guess the amount of money that is burning through. That was just around middle of June. So by now, how much money will he have burned? His workers may still not be able to work. So it's not just a Singapore government thing. This has to be intergovernment and a global effort to reflate the economies. Unfortunately, governments today are still merged in their own, domestic issues, how to combat COVID. Different countries with different approaches, that they're not even getting together and coming together to talk to each other. How are we going to solve this monetary problem that the transaction numbers are collapsing?
Okay. The next one, what other measures would you like to see implemented? What other things do you think the government should do to help alleviate some of these problems? Maybe Alan, while you have
Okay.
unmuted, yeah.
I think that should be on the ground. I think you still need to give some, lack of a better word, cash handouts to the masses. You can every night now, because of the other benefit about the lockdown was, it is still the case, is that I walk 4 kilometers to the coffee shop every day for my dinner. So if you sit in the coffee shop, now I don't go to Boat Quay or anywhere. So I go to the coffee shop, I sit down, you get a sense and you get a pulse of what's going on in the heartlands. And when cash handouts came out on the 28th of July,
yeah,
it was packed, the coffee shop. So was the 29th, 30th, 31st. Then starting last week, it started to thin out again. And this week, it's thinning out again. So I guess, unfortunately, the government should still think about the masses. Companies, yes, they should help, but also think about the masses.
Okay, very quickly from Swee Yong.
Yes, the masses ought to be safe. I'm a supporter of minimum wage myself. In terms of real estate, I think we cannot just have this once-off property tax rebate, and that is equivalent to 0.3 months. I'm not saying that tenants deserve a lot more, but first, landlords probably could be waived completely and to give the market certainty. Why not the government allow for 2020 and 2021 property tax waiver for all sectors, including residential. And residential, the impact would then be to help support each individual family by giving them a property tax waiver. So zero rise for 2 years, that gives certainty. And then let's go further to help tenants to build up their businesses again.
Okay, Jaelle?
I think we covered different things, right? Helicopter money to more like rebates. I'm obviously, as a business owner, I'm a bit more, I think ultimately the business is the engine and drives the economy. So what governments have been doing with subsidizing like wages and keeping people employed, it's a very important thing, both from a, if the economy comes back, we have everyone in place to really start driving that engine as quickly as we can without losing momentum. That's one. But also that mental engagement in the economy and the emotional investment in have. Like, you don't want people to not have worked for too long. You don't want graduates to graduate and kind of first, face like 1-2 years of not having work. So I still feel like that would be one of the priorities. They have done quite a bit, but no matter, it's not enough just because how deep things are now, how prolonged.
Okay, we're going to move on to another poll to check whether the audience is still awake.
Awake with us or gone for happy hours?
Okay, I'm going to launch the poll and allow the panelists to vote as well. Okay, in the meantime, we have a Q&A. I think, Swee Yong, you're going to answer the first Q&A. You volunteered, right?
Yes, I did. Yes.
Okay. So could the reduction in demand for office space be attributed to a shrinking workforce due to retrenchment?
Yes.
Jobs? Okay. Yeah, maybe you can take that question?
For sure, it has happened. I mean, just as a very simple example, think about the companies that are in events, exhibitions, and in the middle of this year, we had everything from the universities and the polytechnics, the convocation ceremonies, the freshman welcome orientation programs, everything went E. So this is revenue foregone that will never be replaced because it is an event. It can only happen once past that date, no more. Formula One not coming in, that revenue foregone. How many suppliers of equipment, lights, sound, hosts, DJs and all gone. So many of these MICE sector, tourism related or events related companies gone. And so they might be reducing either office type of workspace, industrial B1 type of workspace. In fact, for the next question from Citi,
Let me just go live for that question. Yeah, okay. I'll read it out first. COVID-19 will accelerate plans by the government to rejuvenate the CBD area by transforming the CBD from a single-use district dominated by office use to a more diverse and mixed-use district. This could potentially increase the attractiveness of the CBD in the future, resulting in a stabilized or higher rent. However, as the duration of the pandemic and level of disruption remains unknown, do you foresee office rents to remain low, say for the next decade? Wow, that's okay.
This is of course an optimistic view, and it is a good scenario to have if we can right now take the opportunity to, especially some of the older and less efficient buildings, buildings in terms of energy efficiency or in terms of say security features. If the older buildings could be demolished, rebuilt with latest technology as well as the latest planning tools and efficiency and green factors all thrown in, then fantastic, meaning that we have actually been able to make use of the slowdown during COVID to rebuild into a better Singapore CBD. However, landlords getting into that decision now or in the next 12 months would be trying to hazard guesses on what the work from home situation might be like in the next 5 to 10 years, as well as it is now more and more difficult to forecast how the technology-led gig economy is going to affect office space. If you were an architectural firm, say with 20 partners and with a team of another 80 draftsmen and designers, some of them, if you, during this period of circuit breaker, some of them may be from Bandung Institute of Technology, you are happy with them working from the Jakarta office or working in fact directly from Bandung. In future, you do not need them to be coming into Singapore to take up a good space in CBD Singapore. So it is still very fluid. So to come to this scenario where, yes, the whole CBD would in fact be uplifted in future, higher valuations with higher rentals, right now, too early to be able to say anything.
Okay. How about from the other two panelists? Any insights on this particular question?
Okay, I think we live day by day because all these plans that the authorities have panned out or laid out were done pre-COVID. And today there's still momentum going on in certain kind of concepts that are pre-COVID ideas, which I think post-COVID or where we are now, there's no post-COVID. I think it may be here to stay. So I think even think like post-COVID environment, post-pandemic environment, I think these are words maybe we should rethink and not use it. Just use don't even use the word new norm because the norm is always changing in the environment that's so uncertain. Like what Swee Yong said, work from home may not necessarily be working from a Singapore home. it could be working from a plus or minus 2-hour time zone from Singapore. That is no good, right? To be honest, that is no good for us, Singapore. Technology helped us, but once you have this WFH, it's very attractive. You don't even have to deal with Ministry of Manpower with all the
Good
buses.
for residential sector also.
So it's unknown, and if you move forward, I think the whole economy may have to find a new footing. We don't know what it is. We don't know what it is because everyone is fighting their own fires at home. Governments, various countries, corporates. So if the ground below them is shifting, we are standing on shifting sands. So this thing is you just have to live on a prayer. That's it. I mean, I don't want to go even look beyond 221. I think looking beyond 221 is already a very difficult task.
Okay.
Well, I have two parts. It's a bit different. I think I'm slightly more optimistic. There is some part that I agree with Swee Yong. Like, it's very hard to trigger a decision. So even if they are planning, they want to, it makes sense. When the house is on fire, you just need to put it out. So the triggering that decision to invest some more is quite tricky. But at the same time, there's two things that change the dynamics. One is that there's actually quite a lot of dry powder, a lot of funds, and so people with money, and there is a lot more now than say the last crisis, they are waiting to do something. It's just that they were waiting for things to be distressed or depressed or good deal or something to happen. And that's not happening yet because there's still more investors, buyers, or people coming. They're not getting the deals that they want, even if they want to do deals. I think the other part is if people are more kind of developer or real estate funds, people that have healthy balance sheet and can put the investment now, opportunity cost is a bit lower. So if it's a hotel asset that's been old, the old office, which vacancy is low anyway, and they're not going to see any uptick in the next 12, 24 months, then now it's better time than others. So it's a bit selective. It is possible. So I don't think there's a single sweeping thing.
Okay. Okay, we got one last question. It's approaching 6 p.m. This question only Jaelle can answer. Is the great room still looking to expand in the near term and the long term, or to consolidate?
We're so small, nothing to consolidate with, I think I think we're looking to expand. I mean, this year we were actually scheduled to expand, and Alan rightly pointed out construction is delayed. So we were going to open in Robinson Road, and that's like an ever-moving target to next year. We see a lot more demand coming up, and this is really just shifting from core office space to flex. It's still within the same physical space of office, right? And I think there would be better deals to be done in terms of at least landlords sharing that risk with operators like us. So there's more dialogue and conversation compared to when vacancy was tight and other operators were just paying top prices for top deals. So interesting opportunity, but not without that short-term pain in the next few months. I think my take is that, as a summary, in sunny days, we can overtake one car. It's the rainy weather that you can overtake your 15 cars. So if you have that money and the dry powder to do that, then really find that what is that opportunity to overtake the 15 cars now.
Okay. We have come to the end of the webinar. I'd like to thank everyone for participating in this webinar. Thanks to the attendees as well. Attendees, when you log off, there will be an exit survey. We hope you're able to fill that in for us so that we can do better for our next webinar series. That's it. And I will put on our contact details here in case any of you would like to contact Fraxtor. Then thank you very much. Okay, bye-bye.
Thanks, everyone.
Bye-bye.